Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere. And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Thursday that feels like a Friday here on the Financial Exchange ahead of the 250th July 4th holiday. It's Mike, Marc, and Ben with you here on Thursday. It's a day that ends in Y, so we'll have some AI updates for you in terms of who's betting on it, who's betting against it, what's Meta pivoting to this time. We've got some interesting statistics on the biggest area of growth for divorce attorneys and their clients. And before we get to any of that, though, I said it feels like a Friday. Part of the reason why is it's the June jobs report, which usually comes out on the first Friday of the month. We got it a day early instead of a week late here. And we're going to start by jumping right in here, Marc. So markets are moving up after the 8:30 a.m. release of this report. We've got a JOLTS report on Tuesday of this week, and people have been looking at this one a little bit less closely than the overall inflation report, which is what's been driving concern at the Fed. But, wages and job growth can cause inflation, and part of the read today is that markets are up because we got a worse than anticipated jobs report. So let's dive right in there. Expectations were for job creation in the 100 to 150,000 range. We came in well below that. Unemployment rate actually declined to 4.2%. So help me square these things. What did we actually land at for job creation and unemployment here?
Well, those two, the job creation and the unemployment numbers, as you know, come from different surveys. So households reported more people leaving the labor force, about 700,000, than were separated from their jobs, about 500,000. As a result, the unemployment rate went down. So it didn't go down because more people found work. It went down because more people actually left the labor force, maybe because they retired or for other reasons, then lost their jobs.
Okay.
That's why the headline you read will say the unemployment rate fell. At the same time, in a different survey, businesses reported hiring fewer people than the previous couple of months, indeed than the average year to date so far, 57,000 versus a downwardly revised 29,000 the month before.
Yep.
140 some odd thousand the month before that.
I'm guessing that brings the average for the year down to around 100,000 jobs created per month so far. We'll get an updated average there, but somewhere in that general range. And to the headline point there, yeah, we saw job creation at only 57,000, which you can take one of two ways. It's still job creation, net. You're still adding jobs
52.
to this economy.
92, excuse me, yes. So
92, right. So close to 100,000. We're not quite breaching that six-figure number anymore. So I think a marked slowdown for the month of June. That was in spite of a report I saw, I think from Morgan Stanley, estimating that the World Cup probably added a good 50,000 jobs in the month of June. We'll see if that plays out in the non-seasonally adjusted data in future surveys. Sorry, what were you going to say?
No, thank you. You said it.
So we will see how all this plays out. But I think the key headline that investors are latching onto, to me, seems to be the weaker job creation number. I don't think they've been all that focused on the slight change in unemployment here. As you mentioned, it had to do with people dropping out of the labor force. Though I will point out that the Fed cares, what they do care about, at least what Powell was stating they cared most about, was that unemployment rate figure and how tight the labor market is. And whether the labor market tightens because of really robust hiring or people leaving the labor force and not coming back, both can be inflationary. But nonetheless, this report being seen, I think, by investors, and grain of salt here, because other than Marc and I, there's not a whole lot of investors that are paying attention to the news today. It's the day before the July 4th holiday, and you do not have a ton of likely big bets being made on Wall Street this morning. But today, the odds of a rate hike at the next meeting are sitting at just shy of 20%, and they were closer to 30% just a week ago. And so you have had this slight shift in expectations now for what the Fed is going to do on the heels of this employment report.
Yeah, it gives the Fed less room to maneuver. It also helps the Fed. Those two things sound contradictory. What I mean is if the labor market is running at a lower pressure than previously thought, let's take these numbers at face value today,
Sure.
even though, as you pointed out, they're going to be revised. We could have a very different impression of the complexion, the state of the labor market a month from now than we get next month's. So, but this looks like a slowdown taken at face value.
Yeah, and I think, importantly, it looks like a slowdown
in payroll.
Not only because we got a weak report on jobs created, but to your point, the revisions for the last 2 months were fairly significant. We wiped out 70 some odd thousand jobs from our understanding of the labor force just a day ago. So that is somewhat significant in terms of revisions.
So if you were worried about the labor market running hot prior to this month, you're probably a little less worried about that this morning, which takes a little bit of pressure off the Fed, because the Fed in the long term is in control of course, interest rates, indirectly demand, and further indirectly, the amount of slack in the labor market. And on top of that, as Warsh pointed out yesterday, oil prices falling, all else equal, is disinflationary.
Yep.
That's why I assume the market is rallying today, less worried about Federal Reserve rate hikes as reflected in the CME data in the months to come.
Other pieces here that we keep an eye on, the Tuesday JOLTS report indicated that there were a total of 7.6 million job openings posted at the end of May. As of this report, there were 7.1 million unemployed people. So we've been tracking that statistic over time. It's been hovering around a match in the demand for labor versus supply of labor for a few years now. That's compared to back in 21 and 2022 when there were nearly 2 jobs open for every unemployed person looking for work. So we've reached some degree of balance there. I don't think a slight difference in that ratio is much of an indicator of inflation. Like I said, slightly more job openings than there are unemployed people looking for work. The unemployment rate did not really shift around for young people or any really demographic group that I can see here. It's been pretty consistent on that front. We'll take a look at that youth unemployment rate. We've been talking a lot about that as people have been struggling, apparently struggling to find jobs in specific areas of the labor market, but not really seeing it picked up in the data. Those 57,000 jobs that were created for the month of June, again, we'll see how these things get revised, but professional and business services, the biggest category, adding 36K. Social assistance and healthcare continuing to be robust. Leisure and hospitality, interestingly, declining by 61,000 in June, and I would think that if you're working for World Cup, you would be categorized in that group. So again, I'll be interested to see how this stuff gets revised over the next couple of months, but the key message for this month's jobs report for June was weaker than anticipated and pretty significant revisions downward on the state of the labor market. All that having been said, even with these downward revisions, you mentioned we're running at a pace of, 92,000 a month for the first 6 months of the year? Mm-hmm. That's roughly 10x what we created for the full year of 2025.
Last year was terrible. The job market hit a wall.
It did.
Inexplicably, we went from not inexplicably. Tariff chaos was part of the story there. I know that because businesses said we're not hiring because we have no idea what our profit margins are going to be because we don't know what our input costs are going to be. That's the flip side of tariffs. You think, oh, great, protect domestic I don't want to get on a tariff rant here, but you do. You think, let's protect it. Yeah, I always do. Let's protect domestic manufacturers. Well, more than half of imports are bought by businesses that use them for their output. So you're really raising taxes on businesses when you do it.
So in any case, last year's labor market was pretty terrible.
So my point is, businesses. I just want to. I'm not just dumping on the Trump economy here. I'm saying there is a clear cause, a line from cause to effect, and that is it's not clear statistically, but there's a good argument for it. So last year was really weak. Doesn't even capture it. Under 10,000 jobs per month. Yep. Had a
not recession, not net job elimination, but very weak job creation.
Yeah, I mean, in retrospect, it's weird that that GDP didn't contract more, but the AI data center investment frenzy, which was a continuation of 2023, 2024, obviously bailed us out there. Those worries were tamped down by the first 6 months of the year. Today gives you, by that I mean job growth sort of recovered. Unemployment is historically very, very low. Today should just give you, I guess, pause. And it again explains the market. Pause in the sense that, well, maybe the labor market is a little wobblier than we had hoped.
Sure.
That gives the Fed less room for error. At the same time, it takes, as I mentioned, this sounds paradoxical, but it's the case. It also takes a little bit of pressure off the Fed in that a slower, a less vigorous labor market should, all else equal, translate into less inflationary pressure. Yet we saw wages increase by 0.33 or so percent month over month. That's not as much as inflation, I guess we should mention, probably.
Yeah. Year over year, wages, average hourly earnings up about 3.5%. Year over year inflation running
so workers
over 4%.
are falling behind. But that's almost an aside from the Fed's point of view. I don't know, Mike. You could tell I'm probably a little bit confused as to exactly where, as anybody should be.
Yep, pretty much always when it comes to this. I think longer term, describing the labor market that we've all experienced over the last few years. Back in 2023, we hit one of the lowest unemployment rates we've ever seen. It was down at 3.4% in April of 2023. We've slowly, over the last couple of years, climbed all the way up to a peak back in November of last year of 4.5%. And we've been declining since then. I don't know if we will continue to decline. Maybe this is a blip on the radar. Maybe it's temporary because of some massive data center construction. I don't know. But that has been the longer-term trend over the course of the last couple of years, was a concerning rise in the unemployment rate that would normally be potentially indication of a recession. We've talked about the SOM rule and all these different indicators of the past. We hit them, we triggered them, we didn't get a recession, and now we've been seeing that unemployment rate decline for the last 6 months or so, and we will see if that continues. Let's take a quick break. When we come back, on to some AI topics. We've got the Anthropic Fable ban that's over. What happened there? What's the news out of China? That's all next on the Financial Exchange.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
So, a few months ago, Anthropic rolled out this new AI model called Mythos, and they actually didn't really roll it out to much of anybody because they deemed it so dangerous in terms of its ability to detect bugs in software that they were worried about how it could be abused effectively, and they, I think, did not want it. Well, if you want to take the generous interpretation, it would be they were concerned about society having some form of really difficult collapse due to access to critical software. If you want the less generous view, they didn't want to get sued for providing a tool that would allow everybody's bank accounts to get hacked. So take your pick. Instead, what they did is they warned about how significant this tool was. They rolled it out to a bunch of critical institutions that I'm guessing were determined to be critical by a combination of Anthropic, Treasury, Fed, and some others. And at the time, we didn't really know what to make of it, right? In some ways, it seemed self-serving by Anthropic that, hey, this tool is so powerful that we can't possibly release it to the public. It's a pretty good marketing campaign. It turned out it seemed to be quite powerful. And look, like with any new technology, it's a double-edged sword. It can be used for good, which would be deploying to a bunch of institutions that allow them to search for bugs in their code, repair that code, and make it so that bad actors can't access it. Yeah, I like that. It can also be used to detect bugs in code and gain access to systems and take down entire systems, steal data, all sorts of fun things like that. So that was out there for a few weeks, and then finally they came out with this product, Fable. And Fable was same thing as Mythos, but they built some guardrails around it that, from what I understand, would simply kick you out of the model and kick you into a lower-end model if you started asking questions or asking requests that were deemed to be security risks. So, hey, build me code to infiltrate this website, or help me design a chemical weapon. All of those things, would kick you into another version of a different model if it detected that. Almost immediately, the White House said, you know what, you cannot distribute this model to anyone but, you can't distribute to any foreign nationals. And Anthropic quickly said that we have no ability to do that, so we're just pulling it. Since then, what's happened is China released their, not China, a lab based in China released their own model that, according to experts, can do pretty much everything that Mythos can do. And because of China's open architecture, they don't, require subscriptions. They don't, do anything other than release it to the general public. And so it's able to be tested just like the other models that they've released in the past, where it's pretty easy to gain access to them, look at them, understand the code, and use them pretty open source. Pretty much immediately now, the U.S. government has, again, released this Fable model to the public and removed the restrictions there. Apparently a deal was negotiated. But my interpretation of all this is U.S. government had no choice here. You had to go and release it again because you're once again competing with China for the cutting-edge technology on the latest and greatest stuff. And whether it was ripped off from Anthropic's Mythos or Fable, or whether they created it on their own, to me is kind of irrelevant. The Chinese will say that they created it on their own. It'll be tough to prove otherwise. It's out there. It exists, and it's being used. And it brings up this very fascinating question as to what role the U.S. government has in regulating this new technology, which I think most would agree would be some role in doing so. But when you have a technology like this that's accessible from anywhere in the world, and you have a direct competitor that's not following any of the same rules, I'll be very interested to see just where this goes. It seems to me that we will just keep stumbling forward as quickly as possible until a catastrophe happens, and then, U.S. and China and other entities will get together and say, oh, maybe we weren't doing this quite the right way. So there's my long, drawn-out commentary on the state of cutting-edge AI models. Anything to add?
Well, this stuff could pose an existential threat because we're so dependent on digital technology.
Sure.
It could shut down.
I can't
the
access
economy.
my own life savings without access to the company who holds its website.
If the wrong person gets a hold of it, or a mischievous person releases something noxious out into the wild, it could effectively bring the economy to a screeching halt. And that
Absolutely.
Would be
take down a
devastating.
Major critical financial institution, and there you go.
So everybody agrees that potential exists. The threat is, let's just call it existential. It's like an electronic nuclear weapon. I'm mixing metaphors there a little bit,
Sure.
but so why aren't we regulating it like we did, like we do weapons of mass destruction? That's what I don't understand. We got people chasing dollars here who are letting effectively write the rules.
My take would be, why aren't we regulating it that way? Because we don't know how. But we can't talk about that anymore because we've got to head to break. Wall Street Watch is coming up next. We'll have a full market recap and more right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, major indices are on the rise as weak jobs report eases Fed rate hike expectations. The Dow Jones is up over 420 points, or 0.8%. The S&P 500 is up nearly 0.5%. And the NASDAQ is just barely positive, up 0.03%. Oil prices are declining after Qatar says U.S. and Iran made progress during talks. Oil is down 1.5%. And finally here, gold is extending its gains after the U.S. payroll report. It's up over $4,100 an ounce. Taking a look elsewhere, Alphabet is on the rise, up 0.3% this morning after the subsidiary lost a European antitrust case where a court upheld Google's fine, which was $4.67 billion. The fine comes from a 2018 decision by the European Commission to punish Google for what it saw as anti-competitive practices by the company through giving its own applications unfair advantages in Android products. Shares of the Italian technology company Bending Spoons were off 7.7% after its public debut yesterday. The stock had soared almost 40% from its IPO level. Palantir shares jumped more than 3.5% after a D.A. Davidson upgrade to buy from neutral. Analysts at the firm also said they view the stock's valuation as the most attractive in some time. And finally, defense technology company AeroVironment is up 13% after it won a $500 million contract with the U.S. Army. The contract is to develop counter-drone capabilities to the military. I am Ben Kitchen, and that was Wall Street Watch.
Mark, we were talking right before the break about regulation of AI and AI-related companies, and I don't think it's useful to talk in like giant terms of what potentially AI could do and how to properly regulate it. So instead, I want to focus on like one thing, which is Mythos. So let's start right there, which is the latest and seemingly most impressive AI model that's been created so far is this Mythos thing from Anthropic that, like we talked about, seems to be able to powerfully get into systems and detect bugs and find ways for hackers to get in and find ways for companies to close those gaps.
Okay, but Mike,
the question was raised of like, why wouldn't the government go regulate that, right?
Okay, so you want to focus on like the little risks, like they get into J.P. Morgan or something. Okay, well then that's like criminal law will cover that, and consumer protection law might cover that. There's really no big issue to discuss if that's your perspective. I'm not saying it's the wrong perspective. I'm just saying
that's not my concern.
We've got laws that cover it. So how would you?
My concern is a criminal hacker gets access to crucial data systems within the U.S. government and is able to shut down a significant portion of Wall Street.
Okay, well, that would qualify as an existential to me.
Yeah, to me, like we've talked about existential risks, right?
I mean risk to civilization, life as we know it. It would send us back ages in terms of the way we live and the way the economy is structured. You couldn't, if that happens, and it can't be prevented from happening, like we might recover from the first episode, but trust will have deteriorated to the point where people are going to start organizing their economic lives differently.
And I guess my point would be, I don't know how you go and regulate against that by regulating the access to the models.
You say, I'm sorry. This is too much like nuclear technology.
Which you cannot do without the agreement of our biggest rival, right? Right, because if China's
you could say
developed
the same thing about nuclear weapons. You got to bring everybody, again, we have a model for this. It's the early years of the atomic age when we go ahead.
That's kind of precisely my point is we only got to there once everyone recognized mutually assured destruction.
No. Mutually assured destruction came with thermonuclear weapons. That was later. AEC came, right? Ben, correct me if I'm wrong here. I'm not an expert, I'm not a historian. AEC was like 47, 48 when government said we want a monopoly on this technology. Private sector can't use it. We'll license it for power generation and stuff, but it was effectively it was as tightly controlled as anything could possibly be. AI is different in that any clever kid with their laptop,
that's kind of the problem.
Anywhere in the world could unleash something into the wild.
You don't need
with
rare
devastating
materials to go do this.
No, AI, like Iran knows how to build a nuclear weapon.
Yeah,
but it's hard to do because it requires practice and enormous economic resources, which is why the Manhattan Project, which is atomic, not nuclear. I know it's again not my area, so I'm going to botch some of this stuff. But if the threat is existential, then government should be controlling it because that's government's job. If it's not, then let's all just move on.
And my point would be, I don't know if it is existential. I don't know how you control it. I guess you need the agreement of a whole bunch of foreign countries.
Okay.
Now maybe it's not existential.
You've got to show them that it's existential.
Clearly, Anthropic thinks it is.
Yeah, so if the only people that really know what's going on, the people that code, say this could be really bad if a bad actor got a hold of it, changed it even slightly, and then unleashed it, either for their own ends or just threw it out there because they like chaos. If the experts are telling us, and by experts I don't mean MBAs who think they know this stuff, or people in finance whose job it is to sell it to us and others, I mean the people that are doing the coding, I would take them at their word. I mean, again, Oppenheimer was the expert. He told, well, of course, the bomb was used, and then he realized how bad it could be. But yeah, I would take warnings from and I'm sorry to be drawing all these parallels to the.
I hear you, but you're not the
race,
first person to do it. I think it is a reasonable comparison.
Okay, I didn't realize others have drawn these parallels.
Yeah.
Okay, so the natural extension of this analogy is government should step in. Look, I'm very much a governs least governs best type person. But in this case, if the threat is what they say it is, then let's do something about it and just stop yammering every day, hand-wringing, and adopting half measures. Oh, let's prohibit this behavior by this company. Doesn't it seem like...
It does seem like that.
One Band-Aid after another, we're not...
It also seems to me that doing so may cause a full-on recession. Maybe not. Maybe the government invests as much as the private sector is in it right now. But if you are a user of AI models and you have a genuine concern that 30 days from now, the U.S. government might take your model and say, not going to be able to sell that, makes it pretty difficult to invest under that premise.
So if it's economic contraction now versus a 1% chance of total economic devastation later.
With you.
Yeah, I know you are.
I just don't know how you measure that 1% risk and how you measure the trade-off. But yeah, these are the real things that are being talked about in those circles. And it's what's clear to me is that the Chinese AI labs, even without access to the latest and greatest semiconductors through NVIDIA and elsewhere, are finding ways to nip at our heels on development.
I don't think we'd even be, if this were biological, news came out yesterday that a synthetic and artificial cell, and I put cell in quotes because it's not actually living, was it feeds, it reproduces, it needs to be fed, it reproduces through a few generations anyway, and it can be used for industrial purposes to make plastics and other things. Like we make insulin now using microbes. If there was even a chance that some clever kid could make a modest modification to this synthetic cell, I'm not using the right term, I forget what they called it, and then it would get unleashed into the wild and consume everything. Like, it wouldn't even be a question as to whether or not it should be banned. Yet AI has the same potential because we're so reliant on the digital economy.
Infrastructure.
Yeah.
Maybe it does, maybe it doesn't. I don't think either of us are qualified to say whether or not it has the potential to shut these things down.
And
but they seem to think
telling
it
us.
is. Yeah.
Okay.
Yeah.
Yeah. Why are we screwing around?
Let's take a quick break. When we return, I think I've had enough of the I think I've had enough of the AI doomsday scenarios here. So let's take a break from that before we revisit in the second hour of the show. And let's go over to a few financial stories, the newly created Trump accounts, who's going to be serving them, and the latest from Michael Burry is all next on the Financial Exchange.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
The newly created Trump accounts are now getting up and running. They are going to be comprised of some ETFs that have been selected from a list of providers. They effectively are treated as like youth retirement accounts. But the big difference there is for a certain demographic of kids, they can get a free grant to the to the Trump account specifically. So eligible children who are born between 2025 and 2028 can receive a $1,000 federal deposit into their accounts. That's only available through the Trump account. You have to be born between that time period. And then there's an annual contribution limit that you can put into them. All the reading that I've done on these, however, is that, compared to a 529 plan, other than the $1,000 seed money, there's pretty much no point of using one. So unfortunately, I don't think they're going to gain much traction here because ultimately the withdrawals end up being taxed when they come out of there unless there are certain circumstances. Whereas a 529 plan, your withdrawals are never taxed, and these days you can even convert the proceeds ultimately into a Roth IRA, even if you never spend it on college. So by almost all accounts, I get asked this question every once in a while, like, hey, these new Trump accounts, I hear I can get free money. Should I put money here or into a 529 plan? And the conclusion I've come to is, yeah, if you do have a kid born in those years, definitely grab your free money. But otherwise, there's not much in the way of tax advantages of these accounts. A little bit more investment flexibility, probably. Contribution limits are far lower for the Trump accounts. So there's really, so the taxation of withdrawals, the Trump accounts grow tax deferred. Contributions, though, not tax deductible. And then withdrawals are taxed as ordinary income, which you can't withdraw from until the beneficiary turns 18. And so, yeah, I don't know. I don't see much of an advantage to
Taxes
these.
ordinary income at the beneficiaries.
Correct.
Okay.
Yeah, they still could be a dependent at the time, so maybe it shows up on your tax return. But again, I just compare that to the benefits of a 529, where in some states your contributions are tax deductible. It all grows tax-free and tax-deferred, and so long as you spend it on any one of the qualified educational expenses for you can spend it on pre-university or pre-college education. You can spend it on college education. You can spend it on room board. So long as it's used for a covered category, then there's no taxes due on any of the growth. So really tough to compete with that. But the most interesting piece of all this that I found was that the U.S. Treasury has picked State Street, Vanguard, and BlackRock to serve as investment companies for these Trump accounts. And if you recall, President Trump has picked some pretty big fights with BlackRock and their CEO, Larry Fink, over the years, been heavily critical of BlackRock and their ESG portfolios and their real push from their leadership on that front. It would seem to me with this inclusion that they've been able to set that aside and move on from any of those concerns that they had. BlackRock has also taken a big step away from any of that ESG stuff over the course of the last few years, so I'm not surprised. But interesting to me that they are included here, because I would have a tough time believing that somebody at the U.S. Treasury Department just greenlit BlackRock being in these funds without thinking about it the same way I am and running it by the president. So I'm guessing there was some deal made here to ensure that BlackRock was included. And quite honestly, the steps that they've made away from ESG are precisely what I would have anticipated, because as you've heard, the viewpoint on ESG from this program and elsewhere is that from the very beginning, it seemed very much like a way for investment companies to charge a little bit more money on funds that didn't do anything terribly fundamentally different with their business model. And so I'm not surprised that they didn't have an issue taking a big step back from that one.
Their approach here is to require that investors use low-cost index funds.
Yes.
So it's natural.
Yeah, BlackRock's the biggest provider in the world.
BlackRock, SSGA, and SSGA stands for State Street Global Advisors. By the way, people in the Massachusetts area probably know them better as State Street Corporation or State Street Bank. But SSGA is their investment management arm. So that is the same company, if you were wondering. And, of course, Vanguard is pretty much a household name, too.
Yeah.
So they're the biggest providers. They're proven. It's a good approach. As you say, these accounts may not make sense for everybody or even most or even a sizable minority of taxpayers / investors. But the approach is sound. It would be nice if we required 401k plans, frankly, to work the same way.
Agreed.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to retain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets might be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Well, I told you we were going to move on from AI doomsday, and we are. We are not going to focus on doomsday scenarios for AI, but Michael Burry of Big Short fame, who famously called the disaster scenario in mortgage bonds well ahead of the collapse, has been pumping up his book again with new artificial intelligence short bets that he is making. He announced, well, a few things. One, the proximate cause of today's rally is spending announced out of Korea, Burry wrote in his Substack on Tuesday. Well, I see that as the beginning of the end. To be clear here, Samsung and SK Hynix said earlier this week that they plan to invest more than $500 billion to create a massive chip hub. And Burry has been betting against this stuff now for a bit of time. This is not brand new. He didn't call the top on this over the course of the last 30 days. He's been, exposing his worries about this tech AI-fueled run for quite some time. I think the important thing to just keep in mind with Burry is that he, by all accounts, is an extraordinarily intelligent person who correctly called the top of not only one. Like, he was a pretty successful investor prior to the great financial crisis, but has also been very wrong about a whole lot of things when it came to the market over the course of the last 15 years. It is about what I'm willing to say about Burry. Right? Like, incredibly smart by all accounts. He was a medical doctor and then changed over to the investment world. Like, very intelligent individual who hasn't had a great track record of calling the tops of things anytime in the last 15 years.
Yeah, he has tools at his disposal to express his views much more precisely than the typical investor.
Indeed he does. Quick break, but a lot more to come in the second hour of the Financial Exchange. We'll be right back. Stay tuned.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together, let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. As we head into the 11 o'clock hour of the Financial Exchange, markets have taken a bit of a turn for the worse. NASDAQ now off about 0.6%. The S&P just dipped negative, and the Dow Jones holding on to its gains up about 0.75%, adding to pressure that we've seen this week on memory chip stocks and the tech sector generally. It's Mike, Marc, and Ben with you here on a Thursday ahead of the 250th July 4th holiday. Markets closed tomorrow, as is the Financial Exchange. Won't be live tomorrow on the program. But this morning at 8:30 a.m., we did receive a monthly jobs report for the month of June. Indicated just a bit of a slowdown in terms of the pace of hiring. So to summarize, last year was a big slowdown in the pace of hiring. Barely flat in terms of total job creation for calendar year 2025. I think we averaged maybe 5,000 or 10,000 jobs per month. Not a lot. Not enough to keep the unemployment rate from rising. We hit 4.5% towards the end of last year. Since the beginning of the year, call it what you want. It could be concerns about tariffs being behind us. It could be the AI boom. It could be any number of things. Pace of job creation ticked up. We were running 100,000+ jobs a month. Even with the revisions that we got this morning, still running around 90,000 jobs created per month, which, I don't know, most economists that you see cited say, neutral rate of job creation somewhere in that range. Are we above neutral in terms of keeping the unemployment rate steady?
Yeah, so you're asking how many jobs need to be added from payrolls to keep unemployment. Yeah, it's tough because they do come from different surveys, but people estimate it statistically, depending on the assumptions you want to make, anywhere between 80 and 120. And as you said, we're like right in the
smack dab in the middle of that.
Yeah.
But the jobs report this morning, which was expected to show another 115-ish thousand jobs created, instead came in with 57,000, well below expectations. Furthermore, they put in revisions that resulted in our understanding of how many jobs were created in April and May at about 74,000 fewer. So a pretty dramatic revision for April and May. We'll see how June gets revised as well, because they do these revisions regularly. And the unemployment rate ticked down a little bit, down to 4.2%, but the surveys indicated that was mainly because of people leaving the labor force rather than getting new jobs over the course of June. So I think you can look at this jobs report and say, not catastrophic by any stretch, but I'd probably give it something like a C. It's not a top-notch jobs report. It kind of is a big change from our expectations previously. It does give the Fed some wiggle room here because it's not indicating immense pressure from the labor market on wages and inflation. But other than that, I don't think there's much positive to say about it.
Yeah, if some slack is opening up, but that's a big if.
Big time.
Because this is one report, although they did revise the previous 2 months' worth of new payrolls down, as you pointed out. But if the job market is softening, that might reduce pressure on inflation. I say might because it didn't say, for example, in the 1970s, the dynamics were different then, circumstances were different then, but there's no iron law that says rising unemployment has to reduce inflation. It should, but it's not a sure thing.
Well, it's unclear to me that the most recent bout of inflation that we've seen over the course of the last year came from the labor market in the first place.
Came from demand, yeah.
Right,
If it's supply, yeah. The most recent surge, obviously, has nothing to do with excess demand.
But inflation was running hot prior to that.
Elevated, yeah, elevated, because the economy was arguably, until last year, the economy didn't run hot. The growth rate was 2.1, I think, %, right around trend. So it slowed down a lot from 2023 and 2024. It's hard to say. Obviously, the market's impression, and probably the Fed's, is that this takes a little bit of pressure off the Fed. But it also, in some ways, makes the Fed's job trickier at the same time. Because if inflation expectations remain elevated, they went up a lot, obviously, with the oil price surge. Warsh pointed out yesterday that they'll probably come down, but we haven't seen that in the data yet.
Right. So speaking of which, Warsh, the new chairperson of the Federal Reserve, who took over recently for Jay Powell, was in Portugal at a conference alongside foreign counterparts and was asked, of course, about inflation and where things stand right now, and continued his goal of saying as little as possible around there, but did give some commentary, and I'll quote here. Expectations of future inflation over the last 4 weeks have come down. Inflation risks have come down. I think that seems obvious to me.
I don't know what he's talking about there. I don't know what survey he means. Maybe something internal? Because we haven't gotten any data.
I think if you're continuing to talk about what was causing the inflation.
No, I know what I don't know which survey he's referring to.
Fair.
I haven't seen any inflation expectation. It should. He's right. Mm-hmm. Very highly correlated with gas prices.
Right.
But not clear that it's actually happening.
But he continued to say, I think the most important thing, which was that anyone expecting the Fed would tolerate inflation running above 2% would be disappointed in his comments. So he continues to stick with the overall message, which is inflation's too hot and we are going to see it come down. He's applauding some expectations changes that he has determined when it comes to inflation. But overall, this may be contributing a little bit to expectations around future interest rates, as well as we saw, according to CME Group, likelihood of a rate hike at the next meeting coming down over the course of the last 2 days between this jobs report and this commentary from Warsh. Anything else catch your eye in terms of his commentary out of Portugal?
No, I like the fact that he continues to hammer on price stability. He's got to convince us, all of us, people listening, you and me, that he's hell-bent on subduing inflation. And he said whatever he needed to say to Trump to get the job. Mm-hmm. And he obviously convinced Trump that he would be accommodating of Trump's wishes for, if possible, if there's any thread that you can grab onto to justify lower interest rates, he seemed to convince the president that he would grab that thread and run with it. But at heart, I think he's a hard money man, which is an old expression. It means exactly
he really
what
likes
it sounds
coins?
like. Yeah. It comes from
not a fan of paper.
It comes from that era, obviously. He prefers low inflation to slightly lower unemployment if you got him to be honest about it.
And seemingly
even though he would never testify to that effect.
Prefers less interference from the Fed than more. Big proponent of stepping away from the Fed's balance sheet and everything else.
If you asked him, the Fed's job is to grow the money supply at a rate that doesn't overstimulate the economy, full stop. And by that I mean keeps overall demand in balance with overall supply. Because when the Fed errs, it errs by creating too much demand. It eases monetary policy by printing money, lowering interest rates, stimulating demand. The economy runs in excess of its speed limit. That's one way to get inflation. There's the supply. That's demand pull inflation, if you want to use that terminology you may have run into, as opposed to cost push. To continue with this sort of framework, which can come from supply shocks like oil going up. Warsh gets all this, so I'm pleased with his discipline. I think he's largely hitting exactly the right note, at least that a skeptic like me, he's saying things that a skeptic like me needed to hear.
I just like that he's pissing off the media and not talking a lot. That's the most entertaining piece to me is just the frustration that you hear from those who are asking him questions and him basically just saying, I'm not really going to comment on that for now. Love it. Let's take a quick break. When we come back, trivia coming up next.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston. Time now for trivia here on the Financial Exchange. And this weekend, we celebrate the 4th of July and our 250th birthday. The first official Independence Day celebration was held on July 4th, 1777. Today's question: which city hosted the first official Independence Day celebration on July 4th, 1777? Which city hosted the first official Independence Day celebration? Be the second person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. The second correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Is it Muncie?
It was at
Gary, Indiana. Sorry to rip on Muncie and Gary, Indiana. That's not fair. Sorry to all of our Indiana listeners. A new threat to Meta's AI cloud. SoftBank is crashing into this crowded party. So if you missed it, Meta stock got a big lift this week. Stock's up about 8% this week. It's down 4 today, so it was up a fair bit more yesterday. But Meta announced that they are going to be pivoting some of their AI plans. And I'll tell you, this only means one thing to me, unless I'm completely misinterpreting it here. But Meta wants to build a cloud business to sell excess artificial intelligence computing power, which they don't have right now. Meta doesn't currently have any spare capacity to sell, and they've been unable to purchase the capacity from Google that it needed in order to build their superintelligence and AI apps. So presumably they'd need to shut that stuff down to some degree in order to sell the capacity that they currently have to high bidders like Anthropic. Now, this in and of itself, if you do have spare capacity like SpaceX does at the moment, they've made a killing on selling their compute power to other big AI customers who actually have a desirable app. But as we did with SpaceX, the criticism here is you only have this capacity because your own AI apps don't do anything cool. XAI, Grok was useless, and so people stopped using it, and so SpaceX had a bunch of AI capacity to sell. It all reads to me as an admission that Meta has no idea what to do with AI, and while they may have been able to use it to, create some compelling videos on Facebook and Instagram and sell ads to a closer demographic of people, I don't think they know what to do with all this compute power. So my guess is they're admitting here that, hey, we don't know what to do with this compute power, so we're going to sell it to the highest bidder, which is fine. But then you have to ask yourself if Meta is going to be any good at that. Right? Like they've made their bread and butter on, selling ads, and they haven't really been good at anything else. They're not an infrastructure company that has a history of selling business to business. They are not a AI design company. They didn't successfully create any hardware or successfully roll out the metaverse. So I'm just not convinced that Meta is going to be the best at executing data center build-outs and sales of compute power to these institutional customers, but that seems to be a path that they want to go down.
They have nothing better to do with their capital.
Yeah, that was my read.
Kind of damning.
That was my read.
Yeah.
Which, I'm
not saying it doesn't make sense. Excuse me. I'm not judging it, by the way. I'm just saying
it could be the most profitable business unit in the world.
Yeah, I'm not saying it doesn't make sense. I'm just saying self-evidently they have nothing more productive in their estimation to do with their capital.
But I look at that approach as opposed to the Apple approach. Apple doesn't seem to know what to do with AI right now either. So what have they done? They've just stored away their profits and said, hey, we're not going to buy into this right now. We'll continue to develop our best-selling products, and when we see a good case for the best AI applications out there to be built into our own systems, we'll fold them in and pay the price and go about it that way. And just very different approaches to artificial intelligence right now. The other piece that I will mention, part of the reason that that Meta stock is sinking today is because at the same moment that Meta announced it, SoftBank SB Neo will launch Neo Cloud services that provide major U.S. enterprises, including hyperscalers, with the computing resources needed for large-scale AI model training and inference, SoftBank said. By the way, I don't think SoftBank has any better experience in building AI data centers and compute power than Meta, but I will just bring up that SoftBank has a great history of investing in things at seemingly, or divesting of things at seemingly the worst possible time. In early 2019, for example, following a temporary slump in tech stocks, SoftBank grew nervous and they completely liquidated their nearly 5% stake in NVIDIA for roughly $3.6 billion. Haven't done the calculation on what that would have been worth today, but presumably a lot more. They bought into WeWork, pouring $10 billion into WeWork between 2017 and 2019, giving it a $47 billion valuation. Before the thing basically turned useless a few years later after its IPO. They poured some $7.7 billion into Uber back in 2018, and then, followed it into an IPO that completely flopped. And so it's not to say that the investors over at SoftBank are bad investors. They have made plenty of money for plenty of investors. But they've also had some very public misses on, big topics of the day that they invested at the exact wrong time. And so I just did find this one a little bit funny, like, SoftBank, they're jumping in right now. What should that tell us about the market for compute power and artificial intelligence? And my concern would be nothing good, but we'll have to wait and see. In the meantime, Meta stock, as I mentioned, trading down in early markets so far by about 4% this morning on the combined news, SoftBank's entrance into the same market that Meta wants to play in. But again, the Meta story here to me just reads, we built this stuff. We don't know what to do with it. We don't have any customers. We can't build anything that people want. So sell our supply is the read that I'm taking.
What else could you conclude?
Yeah, I don't know. I don't know how you could come to another conclusion if they're saying, hey, we want to sell the compute capacity that we don't really have without shutting down these programs. Seems to me like you're talking about shutting down your programs. In other AI news, though, SpaceX showed investor a prototype of Elon Musk's new AI device, which we don't know what it does. It's sleeker and slimmer than an iPhone. It's going to host a bunch of everything apps. He's talked a lot about concepts like these super apps in China that offer all sorts of chatting and payment options. But from all accounts, it looks like a cell phone.
It is a phone too, right?
I don't know. It's a prototype. For all I know, it could be a woodblock painted sleek black. It's very possible.
And if anybody could sell that,
it would be Elon Musk. That's true. Yeah. If anybody could sell a, shredded up piece of 2x4 cut into a really narrow slice and then painted black, it would probably be Elon Musk. He can sell flamethrowers, tequila. What other Tesla products has he rolled out over the years? So we will see if we ever get any more on the SpaceX AI device that was debuted yesterday with very little news. Quick break. Wall Street Watch trivia answer when we come back.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I get $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, stocks are mixed right now. The Dow Jones is still up just under 400 points. The S&P 500 has been kind of going back and forth between positive and negative. Right now, it's up 5 points, or 0.08%. The NASDAQ, on the other hand, is down 126 points, or about 0.5%. Oil right now is down 1.28% after Qatar says U.S. and Iran made progress during talks. Looking elsewhere on the market, Alphabet has dropped 1% this morning after the subsidiary lost a European antitrust case where a court upheld Google's fine of $4.67 billion. The fine comes from a 2018 decision by the European Commission to punish Google for what it saw as anti-competitive practices by the company through giving its own applications unfair advantages in Android products. Shares of the Italian technology company Bending Spoons are off 9.7% after its public market debut yesterday. The stock had soared almost 40% from its IPO level. Palantir shares jumped more than 2.5% after a D.A. Davidson upgrade to buy from neutral. Analysts at the firm also said they view the stock's valuation as the most attractive in some time. And finally, defense technology AeroVironment rose 12% after it won a $500 million contract with the U.S. Army. The contract is to develop counter-drone capabilities to the military. I am Ben Kitchen, and that was Wall Street Watch. Time to pay off a little bit of trivia here on the show. The question today was, which city hosted the first official Independence Day celebration back in 1777? Well, that would be Philadelphia. Our winner today is Paul from Ocean City, Maine. He has won a Financial Exchange Show t-shirt. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
You know what famous 90s movie the company is named after, right? Bending Spoons.
No.
Is it named after a movie?
Oh, it's named after a moment in a movie.
What?
The Matrix.
Is it really?
Yeah.
Oh, all right. I thought you were coming with a
thought there
weird
was a
joke.
famous-
There is no spoon.
There's a famous mentalist isn't the right word. A guy who claimed to have telekinetic powers who bent spoons on, or forks, or some flatware, on Carson. Uri Geller, I think. Was that? Is that right? It was a little bit before my time,
Yep.
but he was
Uri
a fraud.
Geller.
He was like a performer. He didn't. I don't think he really claimed that he had superpowers.
Well,
I thought that's what it referred to.
The New York Times reports that the company, which I don't know how they're going to go about reviving AOL, but the company's founders apparently named it after that scene in The Matrix. So I'll trust the Times on that one.
No, I had no idea. It was a stupid
I didn't
assumption
either.
on my
I just
part.
I had to
and
look
frankly,
it up.
it's
kind
not
of
something
strange.
I'm ever going to give any thought to again. So.
No, well,
Why do we keep naming our companies after things from movies or books that are 75 years old? We have no creativity left. Palantir, Anduril, Bending Spoons.
Yeah.
Really?
As opposed to what? Ford?
Yeah, name it after yourself.
Okay.
Yeah, I like that better. Clearly.
Westinghouse.
Armstrong Advisory.
Edison. Yeah, I don't know, Ben.
In a less funny topic, divorce rates, while they actually have come way down over the course of the last 40 years as a society. So the overall divorce rate in America peaked at 22.6 divorces per 1,000 married women back in 1980. So that's the annual rate of divorce was 22.6 per 1,000. Generally declined since then to where we were in 2024, which was 14.2. So that's a pretty substantial decline in the divorce rate. Like that stat of, every other marriage results in divorce, which I always counter with, that also means that, the other half end in death. So I'm not sure which one's better, but the statistic has gotten better. However, the rate of divorce for people over the age of 50 has doubled since 1990 and tripled for those over the age of 65, which to some degree, I guess, is logical. If you are living a longer life, the timeline where you can get divorced over the age of 50 or 65 makes more sense. If your expectation is to maybe live until 90 and you genuinely don't like the person that you're with, then I suppose that might be more of an incentive to get divorced later in life. But that is pretty shocking that the pace of divorce for over the age of 65 has tripled over the course of 3 decades. And I don't know what to attribute that to other than life expectancies and that pretty much being it. There's a huge financial difference, though, in getting divorced at 60-something than 30-something. In a lot of ways, less complicated, I suppose, right? When you don't have minor children that are going through a divorce and you don't need to figure out child support and, you have the assets to maybe split up the family home and still be able to buy another home without massive financial difficulty, that could be part of it too, actually, leading to, it can be just financially tremendously difficult to get divorced earlier in life. And so maybe that is part of this as well, is, hey, we couldn't afford to get divorced at 40, but we can afford to get divorced at 50. That having been said, it sure does complicate things from a inheritance perspective. And that is certainly not the thing that people have in mind when they're going through a divorce. But, when you end up going through a divorce, and especially if there is a new marriage in place, all of a sudden you have this immensely complicated financial situation that has to be mapped out and addressed. So for instance, right, you get divorced at 50, remarried at 60. You both, in that new marriage, both have kids from other families, and you're living together in a home that, whatever, the wife had in her family. Let's assume the wife passes away first. Is the husband allowed to stay there? Who gets the home? If it's a family home, is it going to the wife's kids? Do your kids get a piece of it too? How long can you stay in that home? Do you have to pay to stay in that home? There are these very, very complicated questions. The other one that we see all the time, right? Hey, I want my assets to go to my kids and my new husband's assets to go to his kids. We want to split this stuff up, but can that surviving person survive on just their half of the assets, or do they need access to yours in order to just ensure that they can continue to live comfortably during that period of time? And so when we are seeing these paces of divorces tripling for those over the age of 65, I can assure you that older marriages are taking place too, and it presents a unique set of planning challenges. We actually have a new guide out this month from the Armstrong Advisory Group for the month of July, not specifically about divorce and the financial plan, but talking to family members about inheritance, because we have unfortunately seen far too many times firsthand where a lack of discussion ahead of time leads to some very messy situations after the fact. I cannot tell you how many times I have seen siblings, step-siblings, siblings from different marriages sue each other over inheritances that, could have been made very clear ahead of time with just a conversation, or if there's not good terms, then a handwritten note or a legal note that's put together. But I can assure you that addressing this stuff ahead of time, while you're of sound mind, while your kids are in a good place to receive it, can be incredibly important, especially if there are complex family situations, kids that don't get along, kids from different marriages. Addressing the how and why of an inheritance ahead of time can be very, very valuable to ensuring that it goes the way you would want to, rather than to a bunch of attorneys. If you'd like a brand new copy of our guide, Talking to Your Kids About Inheritance, you can request it at armstrongadvisory.com, or you can call us at 800-393-4001. A brand new guide from Armstrong, available just in the month of July, so brand new here. It's available for free by calling 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We've got markets in mixed territory here. NASDAQ off 0.5%. S&P basically flat for the day. Dow Jones Industrial Average up 400 points or 0.75%. We're going to take a quick break. When we return, bit of Stack Roulette is coming up next.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Joining us now is Paul LaMonica, talking to us a little bit about a big IPO that went off yesterday of a, is this right, an Italian tech company, Paul? I didn't realize there were any Italian tech companies left. What does Bending Spoons do that created a 40% surge in markets yesterday?
Exactly. Yeah, no Italian soccer teams in the World Cup, but Italian media companies alive and well.
Yeah.
Bending Spoons owns now AOL, among other digital media brands that people may be familiar with, such as Vimeo, Eventbrite, Brightcove. So what's really fascinating is that AOL, of course, was famously public in the early stages of the 90s internet boom, bought Time Warner. That didn't turn out all that well. And AOL has been sold several times since Time Warner dumped it, changing hands. Was part of Verizon with Yahoo for a bit. Then sold to Apollo. Apollo is now sold it to this company, Bending Spoons, which went public yesterday in the U.S. Shares were up about 40%. Stock's down today, but I think investors are hopeful that this company will be able to get a decent amount of profit from AOL as a cost-cutting play, and maybe trying to turn things around. I mean, AOL, obviously a shell of its former self, but the CEO of Bending Spoons reminded me that they still have about 30 million users worldwide, and he thinks that with some changes to the platform, that they can generate more profits from the business.
So, I mean, bad news signal. My 65-year-old mother finally got rid of her AOL.com email account a couple of years ago. I don't intend on starting up my AOL Instant Messenger account anytime soon. Where are these users coming from? Is AOL producing news still? Like, what is their user base that they are so infatuated or that they are bragging about right now? And what's the opportunity?
I think that there are, as they point out, 30 million people. So some, diehards are sticking with their old AOL.com email address, even though, kind of people laugh when you hear that someone has that AOL email address. There is the digital content as well. I think they are trying to position themselves as more of a media play as opposed to, the access point to the internet that they used to be. But again, AOL is not the only part of the Bending Spoons business. The CEO told me that what they're trying to do isn't necessarily to have synergy between all of the different businesses. They're not really trying to say, convince an AOL user to start using Vimeo video. They want to just cut costs in the various businesses that they are buying and streamline them to generate more profits. And now that they have the stock as currency to do more deals, they might be able to purchase even more digital media companies without having to add to debt, which is a problem for Bending Spoons. They are highly leveraged because of their acquisition strategy. That could be an issue if interest rates climb higher with, a lot of people wondering if the Fed is going to be raising interest rates later this year.
Yeah, that's a clear possible risk. Speaking of the other assets, so the Vimeo product, I feel like most people that have browsed the internet have seen Vimeo out there. What space does that company occupy when competing with the, 50 trillion pound gorilla in the room, which would be Google and their YouTube product?
Yeah, Vimeo, obviously a much smaller video hosting site than YouTube. It was owned by Barry Diller's IAC, which is rebranded as People. That's they spun that off, and now it's obviously part of the Bending Spoons conglomerate. But you combine that with Bright Cove, and I think what those two video platforms, they might be catering more to a professional video audience as opposed to the casual YouTube streamer. So that's something that I think that Bending Spoons is hoping to be able to generate more ad revenue and subscription revenue as well from those two video platforms.
It's Paul LaMonica. Paul, thanks so much for joining us. And by the way, just always appreciate how much detailed knowledge you have about these things that we discuss on the program. I
Thank you.
I can bring up, what's the story of Vimeo, and where it changed hands from, and all the details in there. So Paul LaMonica from Barron's joining us ahead of the July 4th holiday to talk about the IPO that went off quite successfully yesterday for Bending Spoons. Have a great 4th, Paul. We will catch up with you
too.
next
Have
week.
a good one, guys.
I would like to talk now about the final answer of what came first, Marc, the chicken or the egg? because we now know that
can't wait.
at least when it comes to companies colluding on driving up higher prices, the chicken came before the egg, because back in 2016, Purdue and a whole bunch of other companies were charged with criminal collusion, jacking up chicken prices and colluding on price. And lo and behold, when a nice little avian flu problem came about in December 2024, the U.S. government, the U.S. Justice Department alleges that executives at several of the biggest egg producers across the country colluded to shoot prices higher. So Cal-Maine Foods' former chief executive sent a morning text to the head of a rival producer. Let it rip, he said, according to the allegations. A little more than a few weeks after, according to prosecutors, a Cal-Maine executive texted the chief executive of rival Hickman's Egg Ranch, "We are bidding up. Let's hold it today," in at least what seems to me to be a very obvious case of criminal collusion to bring prices higher at the time of a pretty catastrophic avian bird flu problem. Like, this is this not, I guess it's not quite akin, but it is at least like a cousin to a 7-Eleven owner jacking up the price of water bottles during a hurricane. Like, this is pretty bad stuff if it proves to be true, in my personal opinion. Like, maybe not as life-threatening as water prices being brought up, but like, you have a massive shortage of eggs and you are texting the CEO of your primary competition in a not terribly competitive market to say we're going to let prices go high.
Yeah, what an idiot. He put it in writing.
Yeah, what a moron.
I mean, firstly.
Yeah.
I mean, the act, I guess, is despicable, like, morally, but also not very smart.
Agreed. Bad all around. We'll see where it goes. Have a great 4th of July, everybody. Stay cool. We will be back at it next week, and have a great July 4th.